Can you hear me, mate? I can't hear you. Got no audio at all. Can't hear you.
Now, 1 2 1 2. Yep.
Yep. Can you hear me now?
Yeah, I can hear you.
Oh, beauty. Okay. How's the light levels, mate? I've got strong light coming from one side.
Yeah, you're not too bad. You're right.
I'm going to try and switch around a bit. See if this is any better.
Cool. That's perfect.
Perfect. Beautiful.
Excellent. Hi, Jeremy. And hello and welcome to the Ugly Truth podcast. And how are you this fine morning? It's quite rainy here in Adelaide.
Yeah, in Brisbane, we've had 5 days of rain. I think I put a load of sheets and doonas on the line on Monday, and it's now Saturday. I actually took them off the line last night and put them in the dryer. After 4 days, I went, nah, that's it.
Fair enough. Fair enough.
Not used to that in Queensland.
So Bitcoins have a bit of a bounce back recently.
Yes, mate. Most
and
definitely.
I wanted to talk to you about, because let's first talk about, what your credentials are, because you're a qualified financial planner.
Yes.
Yep, and you did that for quite a number of years.
Since 1992.
Wow, so quite a while.
Yeah, a little while.
Yep, and
I started when I was 4.
Very good. I started my first business when I was 8, so there you go. But I had a paper run. It wasn't any, financial planning.
Right.
Yep. So what have you been doing yourself? Tell me.
Mate, I've had, since 92, I've had half a dozen financial planning businesses, all startups. I've also had half a dozen retail businesses. I sold my last financial planning business in 2010 and started actually working with other business owners, financial planners, builders, all sorts of different businesses, winemakers. And using my experiences that I'd gained from running startups, and obviously, being young and silly, I'd made a lot of mistakes, and I'd learned what not to do, and I'd learned some pretty cool tricks from a lot of mentors along the way, and some of them very, very successful in business, multi-millionaires, and a couple of billionaires that I'd run across as well.
Wow, cool.
And learned a few tricks and was sharing the tricks with others, and yeah, it's been an interesting ride, mate.
Well, I'm looking forward to hearing about these billionaires. You can always learn something from a billionaire, you know what I mean?
Absolutely.
But they say in the modern economy, see, 100 years ago, the rich had factories and they were exploiting the workers, and it was just a matter of exploitation. But now, to become a billionaire, you've got to help a billion people.
Mm-hmm.
And I really like the way the paradigms change, where the more you help people, the more money you make in the modern paradigm. And I think it's a much healthier, better way of doing things. You know what I mean? A lot of people don't realize that, but you look at a lot of the new billionaires, they've helped a lot of people and done a lot of good, whether intentionally or not, but that's the way it works now,
Yeah, I think Henry Ford, like way back when a millionaire was actually a decent amount of money in the 1920s, 1930s, he realized that a lot of the guys working for him couldn't afford one of his cars.
Yep.
So he increased the minimum wage, and everyone's going, like, you're going to go broke by paying these guys extra money. He's paying them way more than what the going rate was. But he realized they were going to go out and buy his cars, and
great idea.
money came back to him.
At its own market. I like it.
Yeah. Whatever you send out comes back to you.
Yep. Fantastic. So what are you doing these days? Tell me, what's your latest thing?
I'm still business coaching. I've still obviously kept a finger on the pulse with finance, and even though I sold my financial planning business almost 10 years ago, I've still been dabbling in that for myself and with other clients. Obviously, and not having the licensed financial planning practice, I can't give specific advice and say buy XYZ product. But still, many years of experience, I can give general advice. And if someone needs to buy a specific product, they can get it through someone else. So I can tell you what's going on in the world, but you can't actually buy a stock or a share through me.
Okay,
So,
excellent, great. Because I've got a lot of questions. Because as you probably know, I invest in property, and 99% of my money's in property. And I love property because property just works for me. You know what I mean?
yeah.
Property's double every 7, 10, 12 years or so, and it's pretty stable. Now, but I still believe in diversification, and I don't want to be everything in property because you can't put all your eggs in one basket. And there are certain other things that can do well. And what I've been doing is I've been deciding to diversify a little bit. For example, I took 1% of my wealth and put it into cryptocurrencies. And 1%, the reason I chose 1% is because I don't know much about crypto. And I know it's very volatile, go up and down, but you might make a lot of money, you might lose it all. But if I lose 1%, I really don't give a shit. It doesn't matter. And I think, you know, and a lot of people ask me about crypto, and I said, look, put 1% in. If you make some money, great. If you don't, you don't, because we don't know where it's going. I mean, interesting what's happening lately with crypto. And I think I want to ask you about this because Facebook are now launching a cryptocurrency, which is going to be backed by actual value. So therefore, they're going to try to stop the fluctuations. A lot of big companies have joined in and paid 10 million each, which is not a lot of money, 10 million. It's sweet FA for these companies.
For a big company,
like PayPal and all that sort of stuff. So there's a conglomerate of big companies creating this cryptocurrency. Now, a lot of people say that that may compete with the US dollar.
Yes.
And I'm fascinated by that because one, I've noticed since Libra was announced, Bitcoin's gone up and a few other coins have gone up. And what was your take on this?
Basically, it's very interesting times, and like what made me really good at picking stocks and even picking properties through many years in the market is using the economic clock. Which if you haven't heard of that, Google that, check it out. Because things move in.
The clock is great because we've got the positive property. We've got the property clock. But the economic clock's slightly different because shares and property can be counter-cyclical, can't they?
Yeah. So when you were saying before that the property doubles every 7 to 10 years, it's absolutely correct. In blue chip stocks, your money will double every 7 to 10 years. But the interesting thing is, if you look at the major millionaires and billionaires, they double their money every 4 to 5 years. So they basically move from because property will go up for 7 years and then it'll sit flat for 5 years.
It will.
And while it's sitting flat, the other guys are making money in their stocks. And then when the stock market, before the stock market crashes or flattens out, they move their money back into property. And that's particularly in the US and in Australia, where those are the major markets. Obviously, we've only had crypto for the last 10 years, so it hasn't really been a major market. But we have had other things, and the US dollar has been the major settlement currency since 1945, when most of the major nations in the world participated in World War II and lost truckloads of money. Obviously, even the losers lost a fortune, but even the winners to actually battle the Nazis and that sort of stuff, it pretty well bankrupted the UK and a lot of other European nations. And they borrowed from the US because the US was producing cars and oil and all sorts of things back then.
It was a huge economic boom for the US with that war happening.
Absolutely. And the US made an absolute fortune and then continued to make a fortune by making their currency the settlement currency. So if you wanted to buy oil, if you wanted to buy gold, if you wanted to buy any of these other currencies, you had to settle in US dollars. And so for the last...
How did that pull that off? I mean, wow. Like, what was there a settlement currency before the US dollar? Was it like the pound? No.
The pound was silver backed. The US dollar was gold backed. If we go back to sort of 1913, like World War I.
That's why they call it pound sterling.
Exactly.
Yep.
And then they removed it from the gold standard for international settlements. Removed it from domestic settlements first, and then removed it from the gold standard for international settlements, which basically meant the US could operate like a world bank, and they could just print more and more money and lend money to other nations and have these nations always transacting in US dollars. Now,
that's amazing. I mean, it sounds like a real, how smart is that? Let's get everyone using our currency. We can print it and make money out of it.
Well, when everybody was broke and everybody needed to borrow money from the US could basically write their own rules and just say, hey, this is what we're going to do. And if you don't do it, we're not going to lend you the money.
So that was part of the IMF, the International Monetary Fund?
Yes. and the World Bank and setting up the central banks and things like that. Most
Was
the central banks are Rothschild's banks.
Was there a World Bank before the US did this currency thing?
Mate, back before my time. I'm not sure. I think there would have been, because there was a lot of back in sort of World War One. There was a lot of those state banks, and like New York would print their own currency, and Texas would print their own currency, and that sort of stuff. There wasn't actually a major mint like the Federal Reserve, who was actually printing the currency for the entire nation. So you change dollars as you cross state lines.
Yep. So America pulled this off and started using American dollars for transactions.
Mm-hmm.
And there's a few conspiracy theorists out there that say, as soon as a country decides not to use petrodollars, change their oil for American dollars, suddenly the Americans would invade and destroy them. I mean, is there any truth to this, or is it just a conspiracy? Or
back in 1990, 91, again, I was just a very young fella. I started working as a journalist. Back then, when the original Gulf War was happening.
Yes, I remember seeing it on TV. I was living in Sydney at the time.
Yeah. This is before the internet, when we couldn't actually fact check across multiple sources. So we were being told by Reuters, like 10,000 civilians were killed last night, 3,000 civilians were killed this morning. And the story that we were told to print in the newspaper was that Saddam Hussein had actually shipped out all these people from hospitals and schools and things like that, and put them around the military targets. So when the US destroyed the military target, they were killing all these civilians.
I remember seeing that. And I remember there was some babies, like 500 babies were taken out of incubators. And then
allegedly.
It wasn't true because there wasn't 500 babies in the hospital or something, correct?
Because over there, they could take photos of all these dead civilians and show, the US is bad, the US is terrible. And the US was going, no, Saddam Hussein did this, and he's the butcher of Baghdad, he's a terrible guy. And back then I was thinking, like, I was reporting the news, but I was also thinking, like, he's got to bus people out there, like they've got to chain them up to stop them running away. They're going to need porta potties around these military bases. They're going to need food for all these people. Like, it's pretty difficult to ship 1,000 people or 10,000 people out to a military base in the middle of nowhere. So I was questioning the news back then, but we didn't actually find out until a few years later that the so-called smart bombs, the US smart bombs, only hit their target 7% of the time. 93% of the time they went off course, and the US bombs were actually blowing up hospitals and schools and churches and things like that. So that's why the people in the Middle East had all these pictures of these dead civilians, because the US was actually really, really bad shot. Saddam Hussein wasn't so bad. Mm-hmm. I mean, annexing Libya was within his mandate to do that as a leader in the Middle East. Kuwait. His big bad crime was saying he wants to actually sell oil to the world and settle in gold, because he just wanted to accumulate gold, oil. That's what he had. He didn't like the US. He saw the US as a big bully, and of course they proved him right. But that was his big crime, is I don't want to settle in US dollars. And if the Middle East and countries who buy oil from the Middle East stop settling US dollars, everyone stops buying US dollars, the currency price would fall. And that would hurt the economy in the US. Mm-hmm. So, and there's been a couple of other people who have wanted to settle in gold instead of US dollars as well. And in the last couple of years, we've seen repeats of history, where now the Chinese and the Russians are buying massive, massive amounts of gold, 145 tons of gold, which if you work it out on a per ounce price is a fortune. And the Chinese have sold off $200 billion worth of US currency, US Treasury bonds, in order to buy gold, because people are starting to lose faith in the US dollar and the US's position in the world.
So gold started going up recently, correct?
Yes. Well, when you say Bitcoin's gone up and gold's gone up, it's like maybe it's an illusion.
That's what I was going to ask you, because
everything's measured in US dollars. So, oil prices are measured in US dollars, gold's measured in US dollars, Bitcoin and these other cryptos are measured in US dollars. So it looks like all these things are going up, but if the US dollar is going down, it makes these things look like they're going up.
Of course.
Because it used to take, $1,000 US to buy one Bitcoin. Now it takes, $15,000 US to buy one Bitcoin. So has the Bitcoin gone up or has the US dollar gone down?
Oh, yes, of course, because it's all relative, isn't it?
Yeah.
Well, what's happened to oil compared to US dollar?
That's a good question. I don't keep much of a price.
So I know gold and crypto has gone up compared to the US dollar.
Yeah.
And usually if it goes up for the US dollar, it goes up for the Australian dollar and every other dollar. for some reason. It's all sort of.
Yeah, because the Australian dollar is denominated in US dollars as well. So, Australian dollar's been 70 US cents for a few years now.
Well, yes. I mean, at one stage we were stronger than the American dollar.
Absolutely, 2-1.
So I remember before we floated the dollar, we were actually higher.
Yeah, 1983. I think we were like $1.50 or $1.80 or something like that.
Yeah, because I remember as a kid, I was like 8 or 9 years old. I found $10 US, and I was surprised. And it wasn't much Australian dollars at the time. You know what I mean?
Yeah. And even the pound, like the pound sterling, I think was 3-1 with the US dollar back in the day. But the US dollar, because it's been used as settlement currency, basically they've locked people into this system where everybody has to buy it. And that's why Libra is very interesting with the Facebook coin, because I'll be able to buy, if I wanted to send money to my friends in the US, I've got to go down to the bank and buy the US currency. So I'm paying a bank transaction fee, I'm paying a bank transfer fee.
Yep.
And then there's the exchange rate, which is going to hurt me as well.
Yep.
But if Libra becomes, there's 2.7 billion people on Facebook. It's the most populous nation on Earth, really. And if I want to send money to people internationally, I can simply buy the Libra, send them the Libra. As far as we're aware at this stage, there's no currency transfer fees, or very, very minimal currency transfer fees. Okay. And that's something we've seen with crypto as well.
So you'd always keep your money in Libra, so you can. So for example, I went to South America recently, and I had to change my money. Funny enough, some countries I had to change it to US dollars because they don't have the local currency. They don't like the local currency. They prefer the US dollars. Like for example, I went to the Galapagos, and that's Ecuador.
Yeah.
They don't use the local currency. If you give them the local currency, they don't like it. You give them dollars.
Yeah.
And a lot of countries are like that. So, and obviously the exchange rate and everything else is a killer. And if I could go there and pay Libra instead, I would have saved a lot of money.
Yeah. I mean, I've got friends and family in US, UK, Africa, and Indonesia. And normally I'd try and send them a bit of money if I can, because, third world countries and that sort of stuff. And, my family in US and UK, not necessarily third world countries, but I love them. And it's a lot cheaper to send them money than it is to send them an actual hard gift.
Yep.
But sometimes you're paying $30, $40 in bank transfer fees, and sending money into Africa and Indonesia is sometimes $70 for a bank transfer fee.
It's funny. It costs more money the poorer the country, isn't it?
Yeah.
Funny.
So Christmas before last, like 18 months ago, I was actually emailing them Bitcoin because it cost about 13 cents for the transaction, and I could send them like, $50 or $100 worth of Bitcoin. It would cost me 13 cents.
Yep.
And at the other end, they can either choose to hold on to it, or they can cash it out and accumulate their local currency and go and spend it, buy things.
Yep.
So I was using it for transfers back then, like 18 months ago, because it wasn't being accepted in normal businesses. But now we've got businesses who are accepting Bitcoin right alongside their EFTPOS machines.
Yep.
Brisbane Airport, I think, is the first airport in the world that every single, like the sandwich shop, the t-shirt shop, anywhere that you go, it's a giant complex in the Brisbane Airport. You can buy everything there. Every single business in there will actually take cryptocurrency. So people can come off a plane from China or India or Africa or whatever, they can just land and they don't have to go and pay 3% at currency exchange.
That is awesome. But when you say crypto, does that mean just Bitcoin or other cryptos?
Bitcoin and other cryptos, so Ethereum and Litecoin and Bitcoin Cash.
Yep. Wow, that's amazing. I mean, I did a few transactions with Bitcoin, a few business transactions last year, and also gave my nieces and nephew $100 Bitcoin each, just for a bit of fun. And I thought it was a good present for them.
Yeah.
I've been playing around with Bitcoin. I bought some Bitcoin last year. Now it's bounced back up, funny enough. So I've broken even. And look, I expected to lose money, so I wasn't too concerned. So when Libra, do you think there will be an opportunity to make money out of buying Libra, or do you think it's going to be very stable and not go up like Bitcoin?
Well, because Libra is backed by a basket of other currencies. Like it's like saying, buy the Chinese yuan or buy the Swiss dollar or buy the Canadian dollar. If it's backed by other currencies, then realistically, throughout history, and we're talking like thousands and thousands of years, every single fiat currency is eventually devalued to zero. So the Romans used to trade in gold coins and silver coins, same with the Egyptians. And then over time, they started making these worthless coins and saying this one's worth one gold piece, or having paper currency and things in China and parts of Europe. So all of those paper currencies are now worth zero, and we've seen that. Yeah.
For our listeners, can you
Yep.
explain fiat currency? A lot of people don't understand what that means.
Just fictional currency, basically. Like, I give you $1. If you're a caveman in the middle of Guatemala or something like that, you look at a piece of paper and go, it's worthless, because you don't know what it is. There's nothing to it. But if I gave you a piece of gold or a piece of jewelry or a piece of, piece of pork even, you can see that the thing is actually there. So it's fictional currency. You go back to, we're saying like 1900s, like World War I, $1 was a lot of money. Like, you'd get paid $4 a week. And they've still been using the $1, but obviously over time, it's lost 90% of its value. So, anybody who's over the age of 40 will tell you the story, oh, I used to go to the movies and it was $1.50 or $5 or whatever it was to go to the movies back then, because that was a lot of money back then. So all paper currency is devaluing. So back in, I think it was 1905, 1910, somewhere around there, $1 would buy you a suit. An ounce of gold would also buy you a suit. Now, $1 can't even buy you a tie or a handkerchief, but an ounce of gold can buy you a really nice suit. So the gold has kept its value, property has kept its value, blue chip stocks have kept their value, but the paper currency keeps going down. So yes, Libra will be good for settlement, because we do need cash. Sometimes you go to markets and places that don't actually accept FPOS, so you need a bit of cash sometimes. But it's just going to attract people into crypto. I don't believe that Libra is actually a true cryptocurrency, because it's backed by a basket of other currencies. It's not limited. Like, Bitcoin is only ever going to be 21 million Bitcoin. In the year 2040 or something like that, or 2140, sorry, the last Bitcoin will be mined. And that's it. There's no more Bitcoin. Like, there's no more gold. There's no more silver.
Yeah, the scarcity. Yeah. But with Libra, there will be no scarcity, will there?
No, they just keep printing the currency. Like, they keep printing the US dollar or the zimbillions of dollars, or the Deutschmarks or whatever. They just keep printing it. So eventually the value will go down. It's good for settlement, but I believe that Libra will get a couple of billion people interested in cryptocurrency, and then when they see that some are limited, like, as you say, buying a house, land is limited. They're not making any more land.
No.
And the stocks in BHP or some of your blue chip stocks, NAB or whoever, those are limited. You simply can't get any more. There's just that many. That's all. So those will go up, whereas the currency will devalue. And this is the interesting thing. People look and go, oh, so-and-so, whatever stock has gone up, or my property has gone up, or gold has gone up, oil's gone up, Bitcoin's gone up. Maybe a lot of those things is the currency actually going down, and you need more currency to buy the property. Like, you know the example of Zimbabwe 10 years ago, when you needed shopping bags full of money to go and buy a loaf of bread.
Yep.
That's fiat currency on fast forward.
Yes.
Their inflation rate was 68 septillion%.
Our
inflation rate's only 1 or 2%. What's that?
They had $1 billion note, didn't they?
Yeah, I had a couple of $1 trillion notes. I think there was a $50 trillion note or a $100 trillion note that I was carrying around in my wallet for a while.
So you were a trillionaire.
Well, I say now trillionaire. So
okay,
with the cryptocurrency.
So with Facebook, because the new Facebook currency, if that takes over the US dollar, the Federal Reserve have a problem with that?
Yeah, that's why.
How are they going to feel about this?
The financial regulators have already come out and told Zuckerberg to stop working on the Libra project. They're feeling very threatened indeed. Obviously, what happened in Zimbabwe 10 years ago pretty well, took them from one of the richest countries in Africa to the poorest country in the world, because their currency was just worthless. Same thing happened in Germany in the 1920s after World War I, when the government just started printing the German marks, and it just went down. So you needed wheelbarrow loads full of money to actually go and buy a loaf of bread. So yes, they're fearing the same thing for the US currency. If everybody starts buying Libra, and people on Facebook can just go, okay, I'm going to buy 1 billion Libra and I'm going to buy 60 billion barrels of oil or gold or whatever. It cuts the US out from being the settlement currency. And if nobody's buying the US dollar, guess what? The price has to go down. That's just how the market works. It's just supply and demand.
But ultimately, if we have less friction in our transactions, it's better for the world in general, because currencies suck because there's so many transaction costs. It's so slow and very difficult. And really, at the end of the day, we need something where you can just press a button and pay someone. Like I had to send some money to a cousin of mine in Macedonia, and I had to line up at the post office, go to fill out a Western Union thing and give them an ID and pay this massive transaction fee. Where we're Facebook friends, I should be able to just go click. There you go. Here's some money, cuz. Done.
Exactly.
I mean,
And we were doing with Bitcoin and Ethereum like 2 years ago. And it's interesting because, throughout my entire life, it's always been a 3-day settlement. When you buy a stock, it's T+3. Like the money leaves my account, but I don't actually get the shares for 3 days. And if I was transferring money to you 5 years ago, the money would leave my account on Monday, but it wouldn't get to your account until Thursday. I'm like, hang on, we've got the internet. We've had the internet for the last 20 years. Why does it still take 3 days? Is someone on a bicycle, taking this money across to George? Exactly. But as soon as Bitcoin and Ethereum started doing the Lightning transactions, then suddenly the banks go out and go, oh, we'll do same day, because they're trying to compete with the cryptocurrency.
Yep.
Otherwise, people will start leaving the banks. And the banks are holding on to billions and billions and billions of profits every 3 months. They don't want to let that shit go.
They make a lot of money. We've got the 4 richest banks in the world in Australia. You know what I mean? And when you look at interest rates, even though people think they're low, we get the highest interest rates in the Western world.
Yeah. Japan's on negative interest rates.
Exactly. It's interesting that Japan's on negative, some Northern European countries on negative interest rate. Yeah. How's that experiment working?
Well, you've got to be very, very patriotic to go and stick $100,000 in the bank, knowing that in 2 years' time you'll pull out 98,000. You've really got to love your country to do that.
But if you borrow money from the bank, you're almost getting it for zero interest, though, in those because they're trying to get people to spend money because you need money to move around. Otherwise, if it sits in accounts or sits in assets and doesn't do anything, then no one benefits. Money needs to flow. Yeah,
but if it sits in an account, then the bank can lend it out.
Yep.
So, you look at, say, the low interest rates, 1 or 2% in the US and sort of, below 5% in Australia. And go, oh my God, that's really cheap. I can borrow money, but the bank is lending out 10 times as much money as what they've got sitting in there, and it's not backed by gold and it's not backed by anything. It's just made up money, and maybe 1/10 of it or 1/5 of it. Oh, sorry, 1/5 of 1/10 of it is actually backed by property. So if you're lucky. We've seen collapses in banking system. That's why Bitcoin was invented after the GFC. When the banks started going bankrupt, and 2008 GFC was basically a replay of 1930s. The Great Depression, the banks going bankrupt and going, what did we do? We lent out too much money too quickly, and we didn't follow the rules. So people are starting to lose faith in the system.
A lot of the banking practices in America were pretty bad then, but Australia didn't get affected by the GFC. Not much. Slightly.
Not much.
Not much. And we were quite insulated from the GFC, not GST. So why was that? Why were we so insulated? Is because we got a lot more rules when it comes to lending and things like that. Because it's a lot harder to get a loan in Australia. For example, you need equity and you need a job, and you've got to run a lot of hoops to get a loan here. Where in America, you can get over 100% of the loan very easily. Got a $100,000 house, you can get 110 grand, 10 grand to spend on top of that. Like that's unheard of. We used to be able to do that in the 90s here in Australia. We used to be able to get 106, 110% of the loan.
Yeah.
But
and some of those started to go bad. And in defense of the Australian banks, they saw that was starting to go bad, and they put the limits on. I was actually working in the bank at the time, back in the mid-90s. And they said, okay, the Melbourne property price has gone up by like 50, 60%. We expect them to claw back the following year. We expect Melbourne property prices to drop back by 10 or 20% because things can't go up too fast and they drop back, which is what happened with Bitcoin and a few other things. So our banks actually started asking for 10 and 20% deposit, but only for Sydney and Melbourne because those were the overheated property prices.
Yep.
The rest of Australia was okay. Only Sydney and Melbourne, they started asking for 10 and 20% deposit. And people were up in arms and going, oh, I'm going to another bank. And the other bank started implementing it as well. So my book came out 2 years before the GFC, and I was warning people about this stuff. There is going to be a big collapse because I was watching what was happening in the US as well as what was happening in Australia. Yep. And Australia had started to put the brakes on a little bit, but the US was just still pushing the accelerator. And it was all going to end very, very badly. And one of the things, the Australian banks started winding back on the lending and making the lending a bit more difficult. But also Australia was trading with China. and China was pushing out all these products. You know, US is all buying their iPhones and their cameras and their TVs and that sort of stuff, all made in China. They were borrowing money to do that, but the China were actually buying from Australia the coal, the copper, the steel, whatever to go into these things that they were manufacturing. So Australia was actually doing very, very well by selling the raw materials to China. China was doing very well by selling the finished product to the rest of the world. Mm-hmm. The US would just continue to borrow, and it went very badly. So anybody who actually read my book and took the advice back then got out of US stocks, got into Australian stocks, got into Chinese stocks, and just sailed through the GFC. I didn't have a single client who lost money during the GFC. We all made money.
Yep. And I look, because I've got a very conservative strategy, none of my properties went down during the GFC. And because the top end and the bottom end got hurt, but the mid-range didn't really get affected at all, interesting enough. And it was just the people that were speculating and trying to make quick dollars in property that lost money in property in Australia. Yeah. A lot of them did, because the top end really got hurt badly. And it always does when it crashes. You know, they're the ones that go down 50% just like that. You know? Yeah. Crazy.
Everybody was getting greedy. You know, I mean, if you watch The Big Short, if you see people doing things like that for thousands of years, banks had operated ever since the Knights Templar set up the first banks and the first fiat currencies. For, you know, instead of carrying gold around, they were carrying slips of paper. They set up the ratio of 12 to 1. You know, for every $100 we've got, we'll lend out $1,200. We'll collect interest on the $1,200. We'll pay out interest on the $100. That was the sacred ratio for like 1,000 years. And then, you know, in the 90s, late 90s in the US, they started saying, well, what if we just lend out, you know, keep $100, we'll lend out $1,200, we'll put that $1,200 back in the bank, then we'll lend out 10,000, then we'll put that 10,000 back in the bank, and then we'll lend out $1 million. And they started going nuts. And remember, there was only $100 worth of actual assets to begin with.
Wow.
And the, what was it, Bank of America and GEA, Insurance America Group tied this little contract where they were letting out like $600,000 based on a $100 deposit. And you go, this is ridiculous. They just sort of followed the rules essentially, but blown the ratios out of all proportion. And that's why these guys lost hundreds of billions of dollars. Like, how could you do that when you had deposits? Well, they didn't have the deposits. It was just all made up. It was just all printed currency, made up numbers on the screen. So I think people are sort of waking up and looking at, you know, what is money now? And when all these other societies, you know, we've seen the fall of Rome and the fall of Egypt and the fall of the Greek Empire and the Ottoman Empire and all that sort of stuff, and the devaluing of their currency. And then for a period, people go back to the precious metals and the gold and silvers, and they start building a new empire. We're seeing the collapse of the US empire right now. You know, this is a moment in history, and it's taking years to happen because it's not just going to blow up overnight. But we're seeing that there's less assets, there's a crazy person in the White House, and people are starting to invest in things that are not backed by the US government. Because if the US government disappeared tomorrow, everybody holding US currency would be stuffed, right? Same with Australia or same with Germany or whatever country you're in. But if you're holding property, if you're holding oil, if you're holding gold, if you're holding Bitcoin or something that's a scarce asset, even if it's collectible Phantom comics or Dinky toys or whatever, something that's scarce, it's still going to have value even if all the paper money disappears.
Yep. So what do you think's going to be the future for cryptocurrencies? I mean, do you think they're going to become more stable, or are they going to make people going to make more money in them, or what's going to happen? Because, you know, some of them have fallen down and disappeared. You know what I mean? How do you choose a good cryptocurrency? What do you do? Like,
mate, it's a really good question. I'm glad you asked. Because I've got a system for choosing stocks that I've been using for 25 years. And when it works really, really well. Like, we can have 600% gains in 6 months. When it doesn't work, it still works well because, as I said before, like even during the GFC, not a single one of my clients lost money. We made money, might have only made 10 or 15%. But when everybody else is losing 50%, that's still pretty good.
That's excellent. That's amazing.
And I've got a 9-point criteria for choosing the best stocks, which is outlaid in my book. And then a few years later, when the cryptos came out, I actually adapted it to a 4-point plan for choosing the best cryptocurrencies. And that's why we started up trillionaire.com, which is like a not-for-profit organization where people can actually go there and learn about which cryptos are doing what. Because obviously Bitcoin is its only value is its scarcity, right? Realistically, it's like gold. It's scarce. It just does its thing. And there's other ones that are basically like an IPO, like they're raising money. So like Power Ledger, they wanted to list on the stock exchange and needed a minimum of $1 million to list on the stock exchange. They didn't have $1 million. So they listed as an ICO and said, we're going to raise money and we're going to set up all these solar farms and we're going to start selling power from each person. Whoever's got solar panels on their rooftop can sell their solar power to the next door neighbour. Mm-hmm. And rather than going to the electricity company and selling your electricity to the electricity company for 20 cents and they turn around and sell it for 60 cents, you can sell it directly to the neighbour for 50 cents. It's peer-to-peer. So Power Ledger's doing this. Fire Lotto's doing something else. And we've got like 50 cryptocurrencies in our Boston coin at the moment. It's the first crypto ETF. So like a mutual fund. So you buy one Boston coin, you get 50 different cryptocurrencies.
Wow, okay.
But in 2017, 90% or 92% of the ICOs that launched in 2017 were not there in 2018. 92% of them went broke, disappeared. They were scams, they were whatever.
That's
we didn't lose a thing because we applied this 4-point process and went bang, 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 bang.
This 4-point process, or
what's that?
You care to share a few of these 4 points?
Yeah, I can share it with you if we've got some time. I'm just going to plug into batteries while I'm walking around the house. But it's also on trillionaire.com. We give it away for free.
Okay, so trillionaire.com.
Yes, so CRYLLINIONAIRE. Yeah. How do you spell trillionaire? It's like billionaire with the cryptocurrency in the front. So trillionaire.com. But just briefly, it's 4 points. It's very simple. We call it the coin process. So C stands for the C-suite. Like check out the CEO, the CFO, the whoever else is running this thing. Because there were a lot of scams where there was no real people behind them. They actually had fake pictures and there was no LinkedIn profiles and things like that.
Yep.
So the O is for the offering. What are they actually doing? So Fire Lotto is running a lotto on the crypto blockchain where you can actually buy into lotteries all around the world. So people will know in the US, if you win the lottery in the US, you've got to declare it for tax. So you may lose up to half of it. In Australia, you won't lose up to half of it because we don't pay tax on lottery winnings, but the lottery winnings are a lot smaller. And that's because 20 or 30% of the money from the prize pool is actually going to the government to help the government run anti-gambling or schools or something. But there's some countries where the government only takes 5%, so the pools are much, much bigger in other countries. So Fire Lotto allows you to buy a coin. You can play the Russian lottery or the Swiss lottery or the whatever. You can win hundreds of billions of dollars, but it's all paid in crypto. So your own government doesn't know about it. If you're in the US, I'm not suggesting this as a strategy, but just telling you it's potentially possible that if you win a massive, massive prize and nobody knows about it, if the government doesn't know about it, and you can still travel the world and you can still spend your crypto, then that's between you and God. It's no longer between you and the tax man.
Yes, so, but winning the lotto is not easy. I mean, the chances of winning is very low. So, I mean, it's
if you're gonna play the lotto, you may as well do it through their system. If you're going to have solar panels on your roof, rather than selling them back to the electricity company and the electricity company making a profit, you may as well sell them peer-to-peer. There's a lot of peer-to-peer things happening. Even Libra, you can send money to people without the banks making a profit in between.
Yeah, which is pretty cool. So I really like the way we're reducing friction in the marketplace for lots of stuff like that, which is excellent. Can you do the panels in Australia or just?
That's a good question.
I think the grid won't even let you do a lot with the solar panels here. They're really
There was a couple of companies. There was one setting up in Europe. We interviewed the CEO. I can't remember the name of the company right now. As I said, like we sorted through thousands and thousands of different cryptos.
Yep. So you got Yep.
I did interview a lot of the CEOs, which we put the interviews up on trillionaire.com. We've also got group chats like which is the best wallet and that sort of stuff. And I has left my head because I've started talking about other things.
Yeah.
So we've got the C-suite, we've got the offering. I has left my head, but it's on there. It's on the website. And the N is for the network. So looking at, do they have Facebook? Do they have Twitter? Do they have a Telegram group? How many people are actually talking about this project? Because some of these coins, and if you're around in 2017, you remember the Fruit coin and a lot of all these other rubbish things that actually they'd spent thousands and thousands of dollars. One actually spent $20,000 on a single consultant, and his only job was to convince John McAfee that it was a real company. That was it. Because
Wow.
McAfee was actually checking out a lot of these scams and things were going on. And this guy was actually, his job was to lie to John McAfee during an interview. He was paid $20,000 for that, which he did. He lied. John McAfee believed it. He put it on his Twitter. Thousands of people bought this thing and millions of dollars disappeared within a week.
Wow.
So
wow.
you got to find out if there's other people talking about it, if there's actually friction with this thing, if there's people using it, because Power Ledger, it started off in Perth. A couple of guys in a garage basically just didn't have the money to list on the stock exchange, but had this great idea, and they got the network there. Richard Branson was one of the investors. Richard Branson was one of the early investors into Power Ledger.
Yeah, so
which is what gave it to the
going to invest. That's a pretty good investment, I'd imagine.
Yeah. Yeah, I mean, Warren Buffett's not going to invest in them, but if you see someone who's got a few million or a few $billion investing into them, and this is the thing with crypto, it's supposedly quasi-anonymous, but it leaves a trail. So if you send me some money, I can actually see that I've now got your wallet address, right? So I can actually see, like, I can't take your money, but I can see if I wanted to go and check on the blockchain, I can say, oh, George has also sent $1,000 to this guy and $10,000 to that guy and $5,000 to that guy. I don't know who you've sent the money to.
But
I don't know what you were paying them for.
Wow, okay.
So, you might have been paying for construction costs. You might have been buying drugs and guns on the dark web. I have no idea. But once I've got your wallet address, I can actually see, oh, there's transaction from George. So if Richard Branson sends me money, I is for investors. Sorry, I gave him out of order. If Richard Branson sends me money, I've got his wallet address, and then I can just look and see, okay, Richard Branson sent money to this and to this and to this. If I want to, I can actually check out all the other wallet addresses. I could eventually sort of find back and go, oh, Branson invested into this, Branson invested into that. Same as with when you're buying stocks and shares, there's a public ledger. So you can go and look in the AMP building, and there's a ledger of all the people who hold AMP shares. So you can find out who the biggest shareholders, whether the banks are buying into them or whether the billionaires are buying into them. So it does leave a bit of a trace. You can find out who are the early investors in some of these things. And if you think it's someone with a brain, like the Winklevoss twins or Richard Branson or whoever, then you go, okay, he's not stupid. If he's putting $1 million into that, I mean, as you say, it's 1% of your money, but if Richard Branson loses $1 billion, he's still going to be a billionaire. But he's going to actually spend a few dollars checking out before he puts $1 billion in there. And anybody who's actually going to start investing in crypto, before you put $1,000 into crypto, at least spend $50. Spend $20, read a book on crypto, do a training course, watch a few YouTube videos, spend 24 hours, watch all the YouTube videos you can find.
Yep, you've got a book, haven't you?
Not on the crypto, on the investment.
I'm just in stocks. Yep. Okay.
Yeah. So the Trillionaire blog is just what I've been doing. It hasn't actually been published in paper, but it's updated there all the time.
So how do I spell this? I want to find your website. Trillionaire blog.
Trillionaire with a C.
Yep. CRY. Oh yeah. Yep.
So Trillionaire.com is the not-for-profit organisation where we just give a lot of free education and basically say, this is what we're buying, this is why we're buying it, this is the best wallets, this is how you can get free Bitcoin and things like that. And then Boston Coin is actually the ETF that we run.
Yep.
And that's at bostontrading.co. So for people who just want to buy and hold and not sure which coins to invest
Boston
into.
Coin, is that?
Yes. Yep.
So the Boston Coin sounds pretty interesting.
Yeah. I'll show you the CEO. He's right here.
Yep.
Say hi, Marco.
There's the CEO.
We needed something to name the coin after, and I was planning and trying to come up with a clever name like Trillionaire, and the Boston Terrier walked into the room. So I went, hey, Boston Coin, why not? So, but yeah, obviously, I'm looking at using the system which I've used successfully for 25 years of picking stocks. As I say, we sailed through the horrible market of 2017 and all the scam coins without getting scammed. Mm-hmm. And we've actually set up in America, in Australia, and in Asia, different companies, so that we can actually tackle the broader markets. And again, it's like a mutual fund. It's like your superannuation. You put money in there, forget it, knowing that someone's actually looking after it for you and buying the best coins for you. It's not for trading. You know, Bitcoin and Ethereum, you can trade and you can buy burgers and pizzas and send money internationally. But this is an exchange-traded fund. It's basically a mutual fund. It's just stick some money in there. You can put in $100 a month, or you can whack in $10,000 in one hit and just leave it and come back to it in a couple of years' time.
How's it performing? How's it performed the last 12 months?
Mate, obviously
it would have been tough because all coins have nosedived.
Yeah.
So I don't know if anyone would have made money out of cryptocurrency the last 12 months at all.
No. I mean, obviously the last couple of months, like last month, we went up 15%.
Mm-hmm.
This is before the big rise of the last 30 days. In the last 30 days, I think Bitcoin's gone up about 30%, but we've had some other coins that have gone up by 55 and 60%. So because we've got a parcel of 50 core coins, but we're also investing in the technology stocks, because the technology is the infrastructure. The cryptocurrencies are little cars, you know, sort of running around.
Yep.
And there's the infrastructure underneath, which is the highway the cars run on. So I don't know whether Bitcoin's going to be the greatest coin in the world or whether Ethereum's going to trump it, because they're different technologies. One that we bought into is Chainlink, which is blockchain agnostic. Because if you understand the way a system works, is Bitcoin's on its own blockchain, Ethereum's on its own blockchain, Dagcoin is on its own blockchain. These ones can't talk to each other.
Yep.
But Chainlink came out with a technology that enabled each blockchain to talk to each other.
Wow.
So you could actually transfer money and ideas and smart contracts in between things. And we looked at this and went, hey, this sounds like a great idea.
That's a great idea.
Applied the 4-point process, had a look at the CEOs, had a look at the offering, had a look at the investors, had a look at the network, and went, oh my God, this is amazing. So we bought into it.
What's it called? What's it called?
Chainlink.
That sounds really cool.
The code is LINK. So we bought into it maybe about 6 weeks ago.
Yep.
And probably like 3 or 4 weeks after that, they signed a contract with Google, because Google wanted to be able to talk in between all the different blockchains.
Yep.
Now, the stock went up, I think, 60 or 80% overnight.
Wow.
In like June 15, it just went bang, went straight up. We're like, ooh, we got into that before Google. Like, we done well. So, yeah, obviously, as I say, like, first 6 months of last year, things were sort of going south for the winter. But the good thing was we didn't have any scam coins. We didn't have anything that disappeared to zero. We had a few that went down by 30, 40% in value, because Bitcoin went down, Ethereum went down, all the major coins went down, and a lot of the altcoins followed it. But when the bounce back happens, we're bouncing back and going, okay, that $100 coin went down to 30, now it's up to 50, which is good, but we didn't have any that went right down to zero, because once they go to zero, there's no coming back from them.
Exactly, that's right, exactly. And with coins, you expect that to happen, the big fluctuations. Okay, so that's interesting. That Chainlink sounds amazing. So in regards to stock, what are your favorite stocks at the moment? Like, is it technology based? Because I've been looking into different stuff, and I've been interested in some of the, there's a lot of companies now that are working on longevity.
Yeah.
And that's going to be a massive market. And there was a book called Juvenescence. I don't know if you heard of that. They invest in companies into longevity, because there's a lot of things that are going into second and third trials now, third stage trials, which are pretty amazing stuff.
Yeah.
That have had a massive impact on mice and monkeys and things like that. What are your thoughts when it comes to stock? What sectors are going to go up? Because obviously,
My philosophy is pretty simple, apart from the 9-point checklist, is I look at investing where you spend. So, the people who were buying Yahoo shares and Google shares back in the 90s before the tech wreck, I was like, I use Google, but I've never paid Google any money. I might use Yahoo for the stock checking, but I've never actually paid Yahoo any money. And Yahoo shares went from $10 to $140. And people are going, you're crazy if you're not buying these shares. But there's nothing behind it. Like, they don't make a profit. I don't understand. But meanwhile, like, I'm going down to Coles, or I'm going to Woolworths, or I'm going to the petrol station. I'm handing money over to these guys all the time.
Yep.
So my advice to first-time investors is make a list for like 60 days. keep a list of everywhere that you spend your money. And at the end of 60 days, you can go, okay, look, I gave this much to the grocery store, I gave this much to the petrol guy, I bought a couple of tyres, whatever. Then have a look at, if your budget's not real good, look at what you can cut back on, 5 or 10%. And then say, okay, if I'm going to be buying tyres every 6 months for the next 20, 30 years, even if you've got a driverless car or you're using an Uber, someone is wearing their tyres out. So you can actually buy stock in the tyre company. You can buy stock in the petrol company. You can buy stock in the grocery company. And obviously in fashion, we've seen this over time. Like 20 years ago, people were buying Rip Curl or Mango t-shirts and things like that and go, okay, well, I'm going to buy stock in that. But after a few years, that's no longer cool. That's no longer fashionable.
Yep.
People are now buying billabongs. So you go, okay, I'm going to sell that one and I'm going to buy this one. And it always means that you're in the right place at the right time, because when billabongs started going down, the people who actually shopped there knew it was no longer cool. But the people who were investing into them didn't know, because Billabong's having a bad quarter. They announce it to the newspapers, 3 months later or 6 months later, it comes out in the news. And it's 12 months before you finally realise that they're going broke and I'm still holding stock. But anybody who's going there on a weekly basis or a monthly basis and parting with their money knows. So in Australia, we had Telstra and Optus were the two big phone companies before it was fully deregulated.
Yep.
And I had everything with Telstra. I had 4 cell phones with Telstra. I had a fax machine with Telstra back in the dinosaur ages when we had fax machines. I had internet with Telstra. And everything was good. I bought shares in Telstra. I bought thousands and thousands of shares in Telstra when they were $3 a piece. And the shares went up to $9. I'm like, yoo-hoo, I'm rich, like. But then Telstra outsourced. And every time you'd ring up to get customer service, you were sent to Egypt or India and you're talking to a guy you couldn't understand his accent. And I got really ticked off with him one day. And I went, that's it. I'm taking all my connections, I'm switching over to Optus, but more than that, I'm selling all my shares. So I sold all my Telstra shares when they were $9, took all the money out and then bought Optus shares, which were about $1.20 at the time. And it was probably 6 or 8 months later before everybody else started getting ticked off with Telstra outsourcing their answering services. And the Telstra shares crashed down from $9 to $5. And I don't think they've been north of $5 for the last decade. But that was my fundamental thing. Invest where you spend, because if you're giving the bank money and your friends are giving the bank money, or the insurance company or the grocery company or whatever, they're never going to go broke while you're supporting them. It's very simple. It's worked for 25 years and it'll continue to work, because when you get ticked off, you no longer go and give money to that people.
That makes sense. I mean, I spend a lot of money on Facebook, so I suppose I need to invest in Facebook.
Absolutely. They're making money off you every month if you're paying for the ads. So.
Yep. Okay, excellent. Very interesting. What do you think is going to happen in Bitcoin next 5 or 10 years? A lot of people said it may go up to 100,000 one day. Is that true?
Mm-hmm.
Do you think that could happen?
Well, just based on the fundamentals, I guess, is like the cost of digging gold out of the ground. There's a cost to that, right?
Yep.
So you're never going to, like, while gold fluctuates in value or in price against, the US dollar or whatever, it's never going to go down, so low. It's never going to be $1 an ounce, because it might cost them $5 to dig each ounce out of the ground. So no one's going to dig it out of the ground and then sell it to you for less than what it costs.
No.
Right now, it costs about $4,000 to $5,000 in electricity to mine a single Bitcoin.
Yep.
So no one's going to sell it to you for less than $4,000 to $5,000.
Yep. But obviously,
they'll just hold it.
Yes, but electricity is going to become democratized and it's going to become very cheap with solar panels, things like that.
Yeah,
I mean,
but then someone's got to buy the solar panels and someone's got to have the house.
But sooner or later, I think electricity will be free.
You reckon?
Long term, yeah, because you look at most things, technology is touched. It turns like you look at Encyclopedia Britannica. You get a 5-year loan to get that stuff, and now you got Wikipedia times bigger, and it's free, right?
Yeah.
And technology is democratizing, demonetizing everything.
Mm.
Right, so sooner or later, electricity will become a lot cheaper with technology. I mean, the US has actually got more electricity produced by renewables than anything else at the moment. First time it's crossed that barrier, and other countries are following suit. And also, like for example, you said about mining gold. I mean, there was the mining companies in South Australia. They were copper mines, and they closed down for years.
Yeah,
The
yeah.
price went up and they opened them up again because it
Yes.
started becoming viable again.
Yeah, yeah.
So the price does affect the mining as well, and vice versa.
So
Because
no one's going to dig it out of the ground if it's not worth their while.
no, I mean, Bitcoin, for example, everyone stopped mining it at one stage, and then suddenly it went up, and everyone just said, "Wow, we're going to start mining the shit out of this stuff," right?
Yeah, yeah. So there's also the halvening happening next year. So it's going to take you twice as long to get half as many Bitcoins with the mining. So again, that's a scarcity thing that's built into Bitcoin.
What's happening next year?
It's what they call the halvening. So right now you might be running your processor in like 100 hours to get one Bitcoin, but then next year, as for May 2020, you'll be having to run for 200 hours just to get one Bitcoin.
Wow, really?
So yeah.
So that means that next May, Bitcoin may go up.
Well, it's starting to go up now in anticipation that every coin we're going to be buying in the next 12 months is going to be more expensive as far as resources, electricity, processing power, that sort of stuff. Yeah, and then another 4 years, 2024, it's going to halve again. So you have to run this processor for 400 hours just to get one Bitcoin.
Why is it halving? Why?
That's what's built into the fundamentals of the software. So the people who are saying, yes, I used to mine Bitcoin on my laptop, yeah, you could do that in 2008, 2009. But then 4 years later, you couldn't. You needed 4 laptops all linked up simultaneously to get the same result. And now they've got huge banks, basically shipping containers full of computers running 24 hours a day to try and do what your laptop did many years ago. Because the guy who invented Bitcoin knew that processing power increases every 18 months. We've got faster and faster computers. Like your iPhone now is much more technologically advanced than the laptop you had 5 years ago. It's got more gigabytes, it's got more RAM, it's got more processing power.
Yep.
So
totally.
To stop the Bitcoin coming and flooding the market when everybody's got these super processed computers, every 4 years, the Bitcoin supply halves. So that's why the last Bitcoin will be mined in the year 2100. No matter how fast our computers are, it keeps halving and then halving and then halving and then halving and then halving. So it gets harder and harder to scrape the bottom of the barrel.
So 2100, that's it. So
that'll be the last Bitcoin mine.
So we've got a cutoff point, so that intrinsically gives Bitcoin a lot more value. Is there other coins that have done the same thing, or?
There's other limited coins, not as clever and not as old, and certainly don't have the history and the open source nature of Bitcoin. Because anybody who wants to improve the code can jump in there and improve the code with Bitcoin. It's just got to reach consensus. So there's other sort of private coins that have tried to do similar things, and one's come out and said, oh, we're going to have 48 million coins because that's 4 times as many as Bitcoin, and we're going to do this. And like, sure, that's a scarcity. It's just a scarcity of a different type. It doesn't matter whether there's 21 million Bitcoins or 48 million of your coin and 500 million ounces of gold. It's still scarcity. But is it going to have the adoption? Is it going to have the people backing it? Is it going to have the people talking about it on the news? I'm not sure. And this is why if you're launching a new coin, sometimes you need to spend millions of dollars in marketing just to let people know it's around. Because who's listening now? Who had actually heard of Bitcoin in 2008, 2009? I think I didn't hear about it until 2012, 2013. It just took years and years and years of these nerds using it in back alleys and back streets and in their own little clubs before it actually reached the wider community. It's just an underground success story. But now you want to get out and announce things on Facebook. You don't want to wait 5 years for people to discover your brand.
No, you need the marketing and you need the market sentiment. Market sentiment is so important with any of this sort of stuff because really it's just an idea.
Yeah.
And it's crazy when you think about it, but that idea...
No more crazy than passing pieces of paper around.
No, same thing. It's an idea. But the piece of paper's got something solid about it, a piece of paper, but that's all, you know what I mean? But yeah.
Yeah, there's some other interesting alternatives and low-tech alternatives. Like there are people who actually produce like a 1 ounce piece of gold that's the size and shape of a credit card. And it's got lots of little, what do you call them? Little dotted lines in there, so you can actually crack off, a 1/16 of an ounce of gold, and you can give it to someone and that sort of stuff. And you go, okay, I can put this in my wallet and carry it around like a credit card, but I don't think we're at the stage where I can go to the grocery store or the petrol station and crack off a little piece of this gold and give it to the guy behind the counter.
No, you couldn't use gold to buy things, no.
Yeah, maybe we can, you know, in a few years' time when there's the zombie apocalypse or when the US dollar disappears or something like that. And there's also another company which has actually come out and printed their own banknotes. And they're a polymer, like a plastic banknote, like the Australian note, but it's actually got a micro foil of gold inside the banknote. So they're saying, like, these things, you know, the Australian dollar is only guaranteed by the Australian government, who could go bankrupt. US dollar is guaranteed by the US government, who could go bankrupt. This company is coming out and saying, there's like $18 worth of gold in this, you know, or there's $50 worth of gold in this. How many ounces of gold is in that little thing? And you can actually use those notes. So it's not just guaranteed by the company, but it's guaranteed by anybody who can take that home, run an iron over it, melt the plastic, and then you've got usable gold. Yep. So that's a low-tech alternative.
Interesting idea. But I mean, you think about going bankrupt. I mean, England's been around for a long time now, and it hasn't gone bankrupt. You know?
Yes, almost went bankrupt after World War I and II. Yep.
But it didn't.
It's been around for They've had banks go bankrupt in the UK.
Yeah, but
after 160 years, you know.
But the pound has been around for what, 900 years, and it hasn't gone bankrupt. So that's
but it's lost. It's lost. You know, probably 99.999% of its value.
Well, you think about it. My parents, when they bought a house in Adelaide in the 70s, they paid $2,000.
Yeah.
That same house now is worth $500,000. However, I mean, is it worth $500,000, or do we make more money because they were only getting $400 a year? You know what I mean?
Exactly.
And now you're making $60,000 a year. So how do you calculate that?
It's very now you need $500,000 in a handbag to be worth what $2,000 was worth back then. So your parents would have been buying their weekly groceries for 5 kids for $10. You know,
yes.
The dollars have gone down in value, but the other things, the hard assets, have held their value.
They have, but when you think about it, you look at back in those days, buying a car cost like $500, nearly as much as a house. But now a car is dirt cheap.
Yeah.
And I remember when the VCRs first came out, we paid $2,000 for a VCR, and houses were $30,000, and you're paying $2,000 for a VCR. I mean, it's crazy when you think about it. Now, a new video player came out now, and it was $20,000. You wouldn't buy it.
No.
But in those days, you would.
Because we've seen the advances in technology now.
Yes.
You know? So like right now, you've got your $40 smartphone that can take a picture and open Facebook. You're holding in your hand for $40. You're holding in your hand more technology than was present in the entire world back when the moon landing took place.
Exactly, which is amazing. So you think about everything's becoming cheaper, except for property.
Yeah.
Because they don't make any more of it. I mean, gold, they don't make any more gold. So there's certain things that are limited that are just never, you can't make more gold. However, technology can help us get more gold. Yeah.
I mean, we can have robot drones digging gold rather than gold miners and things like that.
Because technology makes things cheaper. So, for example, seawater's got gold in it. Actually, it's got just about every metal you can think of. And if you had a little drone floating around, it could almost just sift it all through and create gold. You know what I mean? If the technology was sufficient. Because you think about, where was it? A long, long time ago, aluminium was very rare.
Yes, rarer than gold.
Yes, and the French king had a set of aluminium cutlery, only reserved for the best guests, and all the other guests had to use gold. Now, these days, we'd laugh about using aluminium. Apparently, the guy that discovered how to do aluminium, he got killed or something because they didn't want him to spread the word. Yes, because it was so rare and it was valuable because no one else could. But that was all a matter of technology. Now, it's cheap because of technology. So technology is really making everything a lot cheaper. Yeah, so I mean, you might have to sift 1 million tons of seawater in order to get an ounce of gold. But as you say, like, advances in technology and even machines making other machines and things like that, because we've got that technology now where a robot can actually make another robot that's too big for us to actually manufacture in a factory. So they make 5 robots, send them out into outer space or the bottom of the ocean or out in the middle of the desert, and they actually make this super thing.
So yeah, there's possibilities of that. And again, this is why Bitcoin's got the built-in thing where it halves every 4 years, so it gets harder and harder.
Yeah,
and harder.
so Bitcoin's never going to go down, I don't think.
Yeah.
I'd never like to say never, but I'm saying there's a lot of inbuilt things in it to make sure that it's going to go up.
Well, there's a floor. There might not be a ceiling, but there's a floor because again, no one's going to sell it to you for less than what they paid it for.
Yep.
You know, I mean, your parents paid $2,000 for that property, and over the next few years it went up in value, and we might have had a world war or Vietnam or crisis or something like that. They wouldn't have turned around and sold that property for $1,500.
No.
Probably, no matter how desperate they'd get, they'd give it to friends or family.
Well, they lived in it, so property's different. You live in it, so you can't really. Even if it went down to zero, you wouldn't sell it because where you live. You know what I mean?
But investors, mate, you have thousands of properties and things like that.
Yep. So there we go. So if people want to learn more about this stuff, where can they go?
Well, they go to the trillionaire.com to find out about the cryptocurrencies. And again, that's free education, free tips, no advice, but just a lot of education. There's nothing to buy on there. There's nothing to sell. There's just basically stuff that we're doing. We're giving away the information so that more people can actually get in there and find out, okay, how do I use a wallet? How do I send currency? How do I buy currency? If you want to trade, good, but we just believe in the buy and hold. And bostontrading.co is obviously where we do the Boston coin, and we provide education. So there's actually a newsletter coming out later today. Every month we publish an update saying what we bought, what we sold, why we're buying into this. So we do that once a month. So if people want to follow us and find out what we're buying, you can go and do it yourself, or you can do it through us. Doesn't matter. There's plenty of fish in the sea, and we're basically looking for the people who have got a lot of money but no time. So they want someone to do it for them. But if you've got plenty of time, then you can obviously go and do it for yourself and just follow along with the systems that we're using. Again, it's adapted from my 25 years of stock market experience, but also 200 years of studying the economic clock and looking at what happened to the stock market when World War I was on, what happened to the property market during the Great Depression, knowing what the flows and the economic cycles are like. And you can double your money every 4 to 5 years rather than doubling your money every 7 to 10 years.
Cool. Awesome. Excellent. Jeremy, thank you so much for coming on the podcast.
Thanks, George.
Great to chat to you. You have an excellent day. Looks like the weather's cleared up here in Adelaide, so awesome.
Might get you washing dry.
That's right. Cheers, mate. Bye-bye.
All good. Thanks, George. Cheers.